Welcome to the deep dive. So, the stack of property digests you sent over, they really paint a stark picture of London's housing market.
They really do. And our mission today is to cut through that noise and figure out why the engine of UK property has, well, it's pretty much seized up.
Seized up is the right word. It's not just a short-term wobble, is it? The sources suggest London is facing what they call structural sclerosis.
It's a systemic freeze. And I think it's driven by this fundamental loss of confidence.
Right.
And nothing illustrates that better than that Canary Wharf story you flagged.
Oh, that was shocking. Yeah, let's start there.
I mean, imagine this. A seller buys a flat, let's say, for £600,000 back in 2015.
Okay.
Nearly a decade later, they list it for the exact same price, just hoping to break even.
And the best offer they get is what?
Only £515,000. That massive loss tells you everything about the paralysis in the market.
That one story is a microcosm of the whole thing.
Mm.
And the wider numbers, they just back it all up.
Mm.
You've got the rest of Great Britain seeing prices rise 2.6% year on year, but
London prices actually fell 1.8%.
and in key areas like the City of London, the drops were just catastrophic, down 15%.
And if we connect this to the bigger picture, since 2016, it's even more stark. London has only managed a 12% price increase.
Well, the rest of the UK is up.
37%. So London is fundamentally decoupling. It's becoming its own much, much slower economy.
So why is this happening? When we distilled your research, it feels like three major structural forces are at play here, starting with just raw affordability.
It has to be the starting point.
For you to buy a home in London today, 56% of your take-home pay is just swallowed by mortgage payments.
56%. The national average is 34%.
It's a huge gap.
What's fascinating there is the sheer weight of the debt. We're looking at a price-to-earnings ratio of 9 times income in London.
9 times versus about 5.8 nationally.
Exactly. So when interest rates rise or even just stay high like this, that 9 times multiple is just devastatingly punitive for the average buyer.
But it's not just the everyday buyer, is it? The second structural pillar seems to be policy.
Yes. How changes are driving away that high-end liquidity.
We're talking about Brexit, higher property taxes, and the key detail from the sources: those changes to non-dom taxation.
Exactly. You combine all those factors, and what do you get? You get inertia.
People just stay put.
Why would you sell or move when the costs are so high and the potential capital gains are, well, basically non-existent?
Right.
One of the survey details showed 24% of homeowners cite stamp duty specifically as the reason they are choosing not to move.
So that policy gridlock leads directly to the transaction collapse we're seeing.
It does, and that collapse is brutal.
London sales volumes are down 23% since 2014. And the pain is very real for those who actually have to sell.
Oh, absolutely. Looking specifically at prime central London sellers who bought back in 2015, a staggering 59% are selling the properties at a loss.
59%. I mean,
Yep.
That's a market that is just refusing to function.
Which raises this really important question about future supply.
Because if current activity is frozen solid,
Construction isn't going to save us. The statistics are, frankly, alarming. London is projected to have only 15,000 to 20,000 homes under construction in 2027.
wow. And what was the number just a few years ago?
Between 2015 and 2020, we saw between 60,000 and 65,000 new homes being started annually.
So we are heading toward a deeply mismatched market. You've got frozen confidence, these high transaction costs, and a massive supply squeeze waiting just around the corner.
So what does this all mean for you as you look at London?
Yeah, what's the key takeaway here?
The main thing is that the problem is structural. It's being driven by this frozen activity and this psychological paralysis among sellers.
Okay.
And this leads directly to a long-term sociological shift. Buying a home in London is increasingly becoming inheritance-driven.
Right. Not an income-based milestone anymore.
Exactly. And that changes everything about who is buying and what future demand looks like.
And I guess as you contemplate the long game, here's a final thought to leave you with. You just have to look at the forecast from Savills.
It's pretty telling.
They predict that London prices will only rise 13.6% by 2030. But for the UK overall, the forecast is 22.2%.
Almost double.
Exactly. So that stagnation, even if we see interest rates fall slightly from today's levels, it really signals that London's housing challenge is built into the foundation for the foreseeable future.